Hey everyone, welcome back. Hope everyone is having a great Friday. The week is finally over with, and we had a pretty bad week in the markets. Today was kind of a mixed day a little bit. S&P and Dow Jones were up a little bit. NASDAQ was down. Bitcoin was down. Ethereum was down. Miners, for the most part, were down. There were a couple that were up, but it was a mixed day. We'll take a look at all that. We'll also take a look at DMG, Iris Energy. They provided their January updates for production. We'll look at the numbers there. There's not much change in DMG. Iris is up a little bit. We'll look at all that. And then we'll also take a look at when should you sell Bitcoin miners? Is it before or after the halving event? I'm looking at the data we're going back to the 2020 halving event. We have some data on a couple miners, Riot, Hut, and Hive. We'll take a look at that data there, see if it's going to be the same for this halving event that we're going into here in the next year. So we'll look at all the data that I do have on it. I'll explain it all and we'll get through it. Okay. But as always, this is not financial advice, for entertainment only. Do your own research. I'm invested following coins and companies for full disclosure. And let's get into the markets here, see what's going on there. So right now, the S&P was up 0.22% today to 4,090. Dow Jones was up also 0.5% to 33,869. NASDAQ was down 0.62% to 12,304. Bitcoin was down today. If we look at it here, let's take a look. On the daily chart, we were down a little bit today. We were down 0.79% to a close of 21,628. We had a high of 21,942 and a low of 21,467. Excuse me. You can see that the RSI has fallen down quite nicely to 46. Last time we were back here, price at that point was much lower at 16,830. So I think we're still looking pretty good. But we are going to have to test some things here. And it looks like we're going to be testing our support line here at 21,300. I don't know if it's going to hold because if we look at the Bitcoin futures here, the CME, we do have a pretty sizable gap here that needs to get filled. And unfortunately, I think it's going to get filled sooner than later as we are only about it's 21,775 now. And the bottom of that is about 19,960. So we are off by about roughly $2,000 or so on that. I think we are going to get that filled in before we start going up higher. That's just my thinking right now, looking at all the data that we do have on it. As we can see here that on the daily 4-hour chart, you can see here the same thing. Price is going down. RSI is going up slightly here on the 4 hours. And you can see it here as well, really well here. I mean, we're just going up, down, up, down, up, down, up, down, up. And I think we're going to go down some more. You can see it here on the RSI. RSI bottomed here on the 1-hour chart at approximately 16. It has been going up. It is now at 39, while the price from that point has continued to come down, right? So it's not a good sign for us right now. That's why I keep saying I think we're going to come down here. Test the 21,300 mark. After that, we're going down to possibly 19,900 some. We got to fill that CME futures gap. So one way or another is going to happen, whether it happens now, which I would prefer to do it now, before the price goes up too high, we go up to 30,000, we got to come crashing back down. That would suck. So I'd rather have it done and over with, get it done now. Ethereum is looking the same thing here. You can see on the 1-hour chart, Ethereum is right now at 1,514. Let's see on the day. It was down 2.1% on the day. It closed at 1,513. We had a high of 1,554 and a low of 1,491. RSI is at 44. Last time we were here, we're much lower in price. So that's looking still good. 4-hour chart, you can see here that the RSI is kind of flat, but the price has been coming down on it. And on the 1-hour chart, you can see here RSI is going up, price is coming down. So that's not a good sign. I believe we're going to continue to fall some more here. And we'll see how this all plays out. Okay. So that's Bitcoin, Ethereum, and the stock market really quick. Let's get into the miners here as well. And we'll get into some of the news stories that we do have here. So ANY was down 5.85% today to 37 cents. Argo was up 0.53% to $1.90. BitDigital was down 1.67% to $1.18. Bitfarms was down 6.56% to 90 cents. It's a shame there. They were getting close again to being above $1 for almost 10 days, and we've come back down. So they got to restart that again so they can be compliant with NASDAQ. Cypher was down 0.33% to $1.51. CleanSpark was down 8.8%. to $2.96. Core Scientific was down 4.42% to 27 cents. DigiHost was down 10.29% to $1.50. DMG was down down up, sorry. I got used to saying down. DGI, what is that? That is DigiHost, sorry. drawing a blank there. DigiHost was up 10.29% to $1.50. DMG was up also 10.45% to 23 cents. Greenidge was up 2.85% to 64 cents. Hive was down 4.21% to $2.96. Hut 8 was down also 8.2% to $1.68. Iris Energy was down 5.38% to $1.76. Marathon was down 0.5% to $5.92. Mawson was down $1.91 to $3.08. Riot was down 2.48% to $5.51. Soluna was up 1.11% to 35 cents. TeraWolf was down 3.96% to 63 cents. Okay. So that's all the miners there. Let's take a look at the network hash rate. I think it's going to be the same unless it's, okay, well, I don't know if it's changed over yet. It's 282 on the 7-day average. And on the 1-day average, it's still at the same mark as it was yesterday. So it hasn't changed over yet. It's 316 million right now as it was yesterday. So we'll keep an eye on it, see where it goes. Okay. Our first story is just something that I saw here, this one. So Bitcoin price correction was overdue. Analysts outlined why the end of 2023 will be bullish. I tend to agree with this. I think the little price correction was overdue. I've been kind of calling for it to go down a little bit. We just went up too fast, too high in too short of a time period. And we just need a little bit of pullback. I think this is a good thing that's happening right now in Bitcoin. Like I said, we might be going back down to 19,960, somewhere around there, to fill that CME futures gap, and then we'll potentially go back up. But it's going to be maybe a couple of weeks before we get down that low and then go back up. Or it could be just a flash crash that goes down, it fills it, and then we're back up. But we don't want to do that over the weekend. We want to do that over the regular trading week. So I would think that that would be more helpful in that, right? There's not much here. You guys can read over this. This is from Cointelegraph. You guys can, I'm sure it's on their main page right now. Next thing I wanted to kind of go over was obviously yesterday's little crash that we had, 5% down in Bitcoin. This was spurred by crypto exchange Kraken, which settled with the SEC for 30 million. And then we'll close US staking. So everybody was panicking about staking operations. I kind of am on the fence on this one. I think it's a 50-50. I think the SEC got 50% of it right, 50% of it wrong, possibly. But here's what it has to entail. Many centralized exchanges like Kraken and Gemini offer customers the option to stake their tokens in order to earn yield on their digital assets that would otherwise sit idle on the platform. With crypto staking, investors typically vault their crypto assets with a blockchain validator, which verifies the accuracy of transactions on the blockchain. Investors can receive additional crypto tokens as a reward for locking away those assets, okay? So here's my take on it. We saw what happened with Gemini and who was it? Genesis? Genesis lending, I believe it was, that was using, where was it? Why did I see it here? Saw it here someplace. Gemini was using, I think, Genesis, I believe it was. Correct me if I'm wrong on that one. But they were using it, and then we're seeing that trouble right now with, well, Genesis going under. And Gemini is trying to get the funds back for its customers that they put in with their, I think they called it their Earn program or something like that. So in this sense, it makes sense that the SEC is kind of cracking down on this. It is to protect the consumers, us, you and I, excuse me, from getting bamboozled by some of these exchanges that take their tokens, yours, mine, and then they lend them out, excuse me, lend them out to other institutions, Three Arrows Capital, some other ones, BlockFi, things like that, where they earn interest rates on those, and you get a portion of that as well. So when that happens, everything's fine and dandy, but when we have a run on the bank and Bitcoin's going down, crypto's going down, everything's going down, you start having problems where, you know, we had platforms, BlockFi, go out of business, well, not go out of business, but go bankrupt, Chapter 11 bankruptcy. We've seen others as well, Three Arrows Capital, FTX, you know, the list goes on. And we really need something that's going to protect us as investors, as consumers, that if we stake our coins with these exchanges, they have to have certain guarantees in order for us to get our coins back, right? So we don't get, well, at the back of the line when it comes to bankruptcies. So that's one of the things that the SEC that I've read into this looks like is basically attacking. They want to make sure that, number one, the institutions provide full disclosure as far as what they're doing with those assets, those tokens, those coins, whatever they might be. How are they earning yield on them? Are they lending them out? Which, you know, I think that's a given. So that way we have full protection as far as when we're investing, we know what we're doing. The other thing is consumer protection, which is to make sure that those tokens are basically accounted for. So if you're staking it with, like, let's take Ethereum, for example. If you're staking Ethereum to become a validator on the chain, you should be getting rewards for your staking on that, right? Your coins should not be lost because of it, right? So if you do it yourself, if you go with Ethereum, you stake on the Ethereum network, your coins are basically locked up in your wallet or wherever they might be, whatever wallet you're using, but it's in that wallet. And if you want to take those out and stop staking, you can. When you're using a third party, like some of these guys here, it's basically their coins almost at that point, right? They say, not your keys, not your coins. This is basically it. So I'm okay with the SEC cracking down on this. I think this is actually good for you and I and regular average Joe consumers. The other part of it is, it would have been nice. The other part of it is they want the companies to register with the SEC as securities or something like that for securities programs. I'm not a securities expert or anything like that, but the way I understand it is, if they're able to do it and the SEC approves it, that's fine, that's great. But if they try to do it and the SEC says we're going to file a lawsuit against you, like Coinbase tried to do it with, I think, their yield program or something like that. It was yield instead of staking possibly. So there is some differences between yield and staking. So if you're staking coins, you're staking coins to put on the network so you can get rewarded for that. Yield is, you're basically, the way I understand it is giving the coins to them for them to lend out and generate, well, a percentage for you that way, right? So I can see how there's a difference between that. So if you're going to be staking, I think the companies need to file with the SEC. And if the SEC does approve it, which they should, then that's great. And there's some protection in for the consumers. I'm all for it. Now, if they are forcing companies to get approval and then the SEC does not provide approval, well, then that's a bad thing in my book. Okay. So that's kind of where I stand on this. I'm okay with this. I think it's a good thing. It's for our protection. And going forward, I think it's going to be a good thing for the industry in general. So continuing on here, whether it's through staking as a service, lending, or other means, crypto intermediaries, when offering investment contracts in exchange for investor tokens, companies must provide the proper disclosures and safeguards required by our securities laws, SEC Chair Gensler said in the statement. So I agree with this. I think if they're going to be doing staking, whatever it is, staking as a service, they need to have certain guarantees on it. And if you go to the CNBC website, there's a quick little video here from, with the chairman talking about it a little bit, and it kind of makes sense. So I'm okay. I think this is being way overblown, really. If it's all about the protection of us, the users, the consumers, I'm all for it. And as long as the exchanges can get permission to do this, I'm okay. If they can't get permission to do this, then, well, you got to have the SEC figure this stuff out and make it so they can provide this kind of offering. Okay, so that's it on that one. Next, we're going to talk about is really quick is DMG blockchain. They provided their January production update for January. So this is just a quick little blurb here. They didn't provide a lot. They usually just provide it in a tweet. So they mined 100.2 BTC in January. Hash rate didn't add anything to it. They are still basically at 915 petahash on average. Miners added was 0. They're waiting to receive 300 Bitmain XPs. That would get them pretty much to the target hash rate that they're trying to get to. Okay, so let's take a look at them, what we do have on them. So they have 151 million shares outstanding. Stock price is 24 cents. Market cap is 36 million right now. Current hash rate, I have them at 917 petahash. They said 915 average. So that kind of makes sense. Future hash rate is about 1 exahash or 1,043 petahash. They are currently about 87% operational, almost 88. Hash rate growth about 13%. BTC HODL, as far as I know, is 343.24 Bitcoin. This was reported on their, I believe it was Q3. Was it September 4th? So September ending results, Q4 for them. That's where that's being reported at. As far as their BTC production has been concerned, it has been going up here quite nicely ever since, well, pretty much May, I would say July is when they kind of started going back up here. So 54 in July, 69 in August, 77 in September. And then in October was 81. And November was 88, December was 104, and now they're back down to 100.2, which still isn't too bad. It's still pretty good. They've had a pretty nice growth rate here over the last 6 months, which is good to see. They have been installing some miners, which is great also. Their efficiency for Bitcoin, BTC per exahash, has also been increasing. Ever since July here, they were at 79, 89 then, 100, 102, 105, 114. They dipped a little bit here in January, but not too much. I would say that they are still in line with the top 3, 4 miners as far as efficiency is concerned for them. Since we didn't install any miners for them, we'll just take a look at what they possibly earned here in January. It's about 2 million right now, based on the 100 Bitcoin that they did mine. No miners were installed. They were mining for about 27.3 days, it looks like, on average. And as far as institutions are concerned, they have 5 institutions. A lot of shares were sold, though. Almost, I would say, close to being half of the shares were sold. Excuse me. They did have 1.7 million shares at the beginning of January. Now they are at 998,550. And percentage owned is down to 0.6 from 1.03. We still have 1 strong buy rating, 1 regular buy rating, no hold, no underperforming, no sells ratings. And the high or the price target is 75 cents, 62 cents for the average, and the low is 49 cents. I have them currently at, let's see here, about 83 cents with a PE of 10 right now. Looks like they're going to have a revenue of potentially around 25 million if everything stays where it's at right now. We're using the last 3 quarters. I probably should get this updated to them. Let's update this. I've updated it for everybody else when we use the most recent quarters that we do have information on. So the current quarter that we have an estimate on is the December quarter ending, which is about 4.9 million. And then we're using the actual numbers that they reported for the prior periods, quarters. And then we're going to use the most recent one, which is down here. This is an estimate as well. It's 6.5 million. If Bitcoin stays where it's at, network hash rate stays where it's at, and they mine the same amount roughly. So for a total of them, we're looking at about $22 million in revenue potentially for them, 50% net income of gross revenue. We're looking at 74 cents for them, which is kind of in line with what they had here on the analyst, which said 75 cents. Yeah. So, I mean, we're pretty much right there with the analyst. They are currently at 24 cents. So I would say they are undervalued right now. And then if Bitcoin starts going up, we could use a 75% net income gross revenue. Then it would be about $1.11. And if Bitcoin really starts pumping up, they might get to 15 PE, $1.11 to $1.67, somewhere around there. So that's about it for them. They just need to get miners in, and they need to continue to grow into 2023. They are one of the smaller ones along with DigiHost that I cover here. So we'll see how they actually do going forward. But they're going to, I believe they don't have any debt here. If we look down here far enough down, let's see, what is their total current assets is 17 million Canadian dollars. Total assets 96, and total current liabilities is 5 million. Very little debt, $5 million in total. So they got plenty of current assets to pay off any debt that they do have on it. So that's a good thing there. So they just got to grow. Okay. All right. That's it for DMG. Let's take a look at Iris here, which is going to be next. And let's see here. Here's Iris. So Iris also announced their monthly production updates for January. Why don't we take a look at that one there? And we'll get into the Bitcoin halving. When should you buy? When should you sell? So here's Iris Energy for January. They mined 172 Bitcoin here, and their energy costs went, I believe, up a little bit to $11.2 thousand. It used to be a little bit lower. They're saying if it was adjusted for the hash rate that they had prior to giving back the miners, this is kind of what they would have paid, 9.8 thousand. Because they're not using as much electricity, they're getting kind of dinged for it. The more you use, the better rates you get, as anybody knows. So they're currently at 11.2. which still isn't too bad, and we'll see how it goes going forward. Now, they did add 0.2 exahash of miners installed at Mackenzie, increasing operating capacity by 15% to about 1.7 exahash right now. Their strategic focus remains on expanding our self-mining capacity to 5.4 exahash, utilizing data center capacity that is available and or under construction, and the company to release its financial results on February 15th, 2023, which will be great. That is the quarter ended in December 31st. So we'll get that coming up, and then everything else here is pretty much some information that we already know about, so I'm not going to go over it. You guys can take a look at this if you'd like. Okay, so let's take a look at the numbers I do have for Iris, and we'll get into the next one. So shares outstanding is 54.9 million. Now market cap is 96 million. The stock price is $1.76. Hash rate 1.7 exahash. Future hash rate, they're saying 5.5. I currently have them at 2.7, depending on how they get the miners, when they get the miners, and things like that. But you can see here that their production took a big hit after October. They had 448 BTC. And when they gave back the miners because of their special purpose vehicles weren't able to pay for the miners. Those miners were given back to the lenders. So they dropped down to 151 here in November. December was 123, and now they're back up to 172, which is kind of nice to see that growth continue to go back up a little bit here. But they were looking to be one of the darlings here possibly in 2023. Had Bitcoin gone down to like 16,000 and wiped them out of almost 3 exahash plus of miners. That really hurt them. And their BTC efficiency per exahash, you can see here it was 114 in October, 104 in November, dropped down to 81 here in December. Now they're back up to 101, which is good to see as well. And the revenue for the month of January is about 3.4 million compared to 2 million in December. So that's good there. Now, I believe they sell everything that they mine, so there is no hodl position for them. The miners that we did install here in January were these 100 terahash miners, about 2,000 of them. They give them the extra 200 petahash. So they are at 1.7 and they're up, up almost 50% as far as revenue is concerned, a little bit more than that. 50% would have been 3 million. So they're up about 65 maybe percent up in revenue, which is good. So that's a good sign for them. As far as institutions are concerned, a little bit of a decrease here on the institution side, but we had more shares bought. So 39 institutions compared to 42, 12.28 million compared to 12 million. So that's a nice increase there. Percentage owned also went up to 22.33 from 21.87. So that's good there. As far as analysis ratings, we still have 2 strong buys, 1 buy, 4 holds, 0 underperforms and 0 sells. Price target is $14 for the high, $6.30 for the average, and $3 for the low. So no changes there. And here's what we have for them right now. They're saying $14 for the high. Now that's a little bit higher than I have them right now. So they're on a little higher side. I have them, let me see. Let's use them. Well, probably should update this one as well. We aren't using the most up-to-date data. So let's add the current quarter that we're in as an estimated one. I'm still waiting for the September numbers and December numbers for them, which they're going to provide here in a couple of days. We'll get that data. And then we are using the current quarter. The last 3 quarters are, let's see here. Oh, we don't want that one. We want, let's see here. We got that one. We want to do, make sure we get this right. That one plus that. Okay, so now we're accurate. We got those 3 quarters. 2 quarters are estimated along with the quarter that we're in right now. We only have 1 actual quarter that's accurate numbers. 17 million on Q. I don't know if it's going to be either Q2. No, it wouldn't be either Q2. It would have been like Q4, I think. And that's down here. Okay, so we're looking at about 57 million. So with that being said, 50% net income from gross revenue, we're looking at $7.79 roughly to about $11.69. They're saying $14. That would be a PE of about a 27 PE that the analysts are looking at. Or they're looking at maybe more growth or better numbers on the revenue side. But this is kind of where I have them at. They are currently at $1.76, so I do believe that they are way undervalued right now. And, we'll see if they can pull themselves out of this little hole that they dug themselves into, start getting more miners in, possibly purchasing more miners. And the miners that I do have here are, let me see here, which ones are we counting here as being, so some of these were returned, which see, this was 2.57 on this. And what else do we have here? And then some of these were, I don't know if those were never brought in yet. What else do we have here? We have some of these being returned and some of those. So yeah, they returned like 3 exahash and change on the miners for the loans. So I'm counting what we currently have here as these, and then possibly if we add those, well, those are even a lot higher, but I think they canceled these orders down here. So we'll keep an eye on it, see where they end up at. But overall, they just got to keep growing. Unfortunately, it's like for anybody else, they just got to keep growing their hash rate, growing their miners, and hopefully Bitcoin continues to go up this year and into the halving event next year. Okay, so speaking of the halving event, here's the data that I went through the last couple of days. It took me a little while to pull the data in and look up the miners that were actually mining at that time. Hopefully you guys can see this okay. There's a lot of stuff going on here, so I'll try to explain as best as I can. The data starts from 3/8/2018. So this was right, it was basically right after Bitcoin pretty much peaked at, what was that? 19,000, something was 20,000 in December of 2017. And then it was going into a bear market for the next what is it, almost 2 years or so before the next halving event. So we peaked in December of 2017. This is after the peak, we were coming down in price. So the red line here is the Bitcoin price. It is drawn onto scale here with the miners, but the amounts are not accurate. The amounts are for the miners here. The $2.50, $5, $7.50, and $10 are for the miners. The Bitcoin line is, well, at that point, I think Bitcoin was around 12,000 and went down all the way to like $3,000, something like that, and then went back up. Okay. Green line is for Hut 8. The blue line is for Hive here, and the gray line is for Riot. So all of the miners pretty much bottomed out towards the end of 2018, right around in December. You can see here that we got the Hive, Hut, and Riot all being way down from where they were earlier in the year. Kind of similar pattern that we've seen this year or 2022, where the miners were just coming down and down and down until they pretty much bottomed out at the last trading day in December of 2022. So kind of similar pattern here. The only thing that's a little bit different is, well, right now we don't know what's going to happen as far as the Bitcoin price going forward this year. We don't know what's going to happen with the miners as well. This is the only data that we have on the miners and a single halving event. We don't have multiple data points to use against different halving events to see how the miners performed before and after. So we're kind of blind in this a little bit. We don't know if this is going to repeat itself the way these miners acted. We also have a lot more miners in play right now than we did back then. So there's a lot of unknowns. And I think once we get through this halving event into the next bull run, we'll have a little bit more data on this. We can kind of compare, see how things ended up last halving event, how they ended up having this halving event. And then maybe we can draw some correlations between the two. But right now, it's just too early to tell. But here's some of the things that I did learn. So Hive, after they all bottomed out at the end of 2018, Hive peaked here in 2019 at about $3. This was on 4/10/19, or that should have been, yeah, 4/10/19. And Riot peaked at $6.02 on 4/23/19. Hut peaked at June of 2019 at $2.23. Then as we got closer to the halving event, here's the halving event that happened on, this was May 11th of 2020. We can see here that from there, the miners went down as we got closer to the halving event. Hive bottomed out on December 17th at 30 cents. Riot, let me see, where's Riot? Riot and Hut both bottomed out at 65 cents for Riot, 41 cents for Hut at March 18th of 2020. And that was 52 days before the halving event. Hive was bottomed out 146 days before the halving event, okay? So that's kind of where we're looking at the data here on the chart. And if we look at the data after the halving event, here's what we have learned on this. After the halving event, which happened on 5/11 of 2020, Hive pretty much topped out at $26.85 on 2/19 of 2021. So that was almost a year later, almost. Just a couple months shy of being a full year. Riot also pretty close to that date as well. Riot topped out at $77.90 on 2/17/21. So a couple days earlier than Hive did. And then they started going down. Bitcoin at that point reached 64,899 on 4/12/2021. So it looks like Hive and Riot were front running a little bit Bitcoin price appreciation. And we can see here that Hut didn't get to a high until 11/8/2021 of $15.90. And you can see here also that Bitcoin, when it came back up, it basically went up here on 11/10/21 at 69,000. So this was our double top here that we reached. That should have been probably over here a little bit on the mark. Look at it. That should have been placed right there. And this one should have been placed a little bit further up here. Hut right there. There we go. Okay, that makes a little bit more sense on the chart. So that's kind of where we peaked. And it looks like Hut, if you look at it, has been kind of following Bitcoin more or less than the other two on this. You can see it here on after the halving event, right? It was 11/8 that it topped. Bitcoin topped at 11/10, a couple of days after it. And then if you look over here, Riot bottomed pretty much here at 318, where we also had pretty, I think it was right around that same time frame where we had the pandemic lockdowns, markets crashed, Bitcoin crashed as well. And that's when they bottomed out as well at that time. But other than that, they were kind of following Bitcoin a little bit more closely, it seems like, than the other two. Okay. So that's kind of the data that we do have on it. And let's take a look at some numbers here for it that we can take a look at as well. Let me zoom this in 150%. Okay. So here's what we got. Hive, Hut, and Riot. Hive peaked on 418 of 2019. Hut peaked on 626 of 2019. Riot peaked on 423 of 2019. Days away from the halving, that was 389 days for Hive. Hut was 320 days. Riot was 384 days. On average, they peaked about 364 days before the halving event. So if history is going to be repeating itself, we would be pretty close right now to where the miners possibly might peak, as we are getting close to being potentially in March. They're saying sometime next year that the halving event is going to happen. Right, we're getting pretty close to that date where could the miners have peaked where they peaked right now within the last week or so, and or is this not going to happen the same way it did? Just don't know. Peak price for all these was Hive was at $3, Hut was at $2.23, Riot was at $6.02. As they got close to at the halving price, they were at $1.40 for Hive. Hut was $1.92. Riot was $1.59. That was a change of about 53% for Hive. Hut was down 58. Riot was down 73%. Okay, so they went down quite a bit here from where they peaked into the halving event. And they bottomed out, actually, like we reported here on 2019 for Hive, right before the halving event, 146 days before the halving event. Hut bottomed out at 54 days away from the halving event on 318 at 41 cents. Hive was at 30 cents. Riot also bottomed out at 318, 54 days away from the halving event at 65 cents. So 318, 2020, that was right around... Where was that? 318. Oh, let me see here. 318. Right around here. They kind of bottomed out right there for, is that right? This is, 2022. It's 318. This was back here. Yeah, that was 1217 for Hive. 318.20 right before the halving event. They bottomed out right there. Okay. From the halving, see here, from halving, what was that? Oh, now I'm looking at the price after the halving event where they peaked after the halving event, which was Hive here, Riot here, and Hut right over here where they peaked. So had you bought at the very, very bottom, you would be up 8,850% on Hive to the top in 2021 that they reached of $26.85. For Hut 8, you would be up 3,778% when they finally peaked here at November 8th in 2021. And then Marathon, you'd be up 11,884% when they peaked at $77.90 on 2/17 of 2021 as well. All right. Two halving events. Let's see here. 30 cents. That should have been two halving events. Let me see here. Halving price, $1.40. So this was half. Okay. So that's what they were at the half price. And I think I made a mistake. Well, I don't know. Got a lot of numbers here. 140. Where was the 140 at? At that price. At the halving day, that was the $1.40 price. And then had you bought at the bottom, okay, so had you bought at the bottom here on these miners when they reached Hive on 12/17/2019, Riot and Hut on 3/18, had you bought at those bottoms to the halving event, you would be up 366% for Hive. Hut was up 124%, and Riot was up 144% from the bottom to the halving. Okay. Now, days after halving. So Hive peaked 219 on 2/19/2021, 284 days after the halving event. Price was $26.85. You would be up 1,117 if we use the 100. If you bought just on the day of the halving event, you'd be up that much. Hut 8 peaked on 11/8/2021, 546 days after the halving event at $5.90, you'd be up 1,628% had you bought on the halving day. And then Riot peaked on 2/17/2021, 282 days after the halving event at $77.90, and you would be up almost 4,800% roughly after that. And the average on this is 371 days after the halving event is when some of these have peaked. So some are sooner, 284 days. Some are a little bit later at 546. Now, these are only 3 miners that we had. This is the only instance that we had of this event happening. We are going to the next one. We have a lot more miners. We don't know if this is going to happen again. So some things to consider in this. Like I said, this is the only halving event that we have worth of data. Miners were much smaller at that time as far as exahash. Most of them were even at an exahash. They were at a couple petahash, maybe a couple hundred petahash after that. Bitcoin price was also much lower at that time. We have a lot more public miners than this time around. Cash is also possibly spread out more between the miners that we do have. And the hash rate was also a lot lower where it is right now. So we have a lot of different variables that we just don't know about. Okay. So basically what I'm trying to say here is we really don't, not that one. Let me see, where to go. This one. We really don't know what's going to happen this time around as we only have data for one halving event. Had we had at least 2 or 3 and we saw the same pattern happening each time, we could say, well, the likelihood of that happening again is going to be more or less so. With this being the only instance that we do have, it's hard to say that this is going to happen again. If it does happen again, based on this, it would be right now the best time to possibly sell. Wait until you get closer to the halving event, right around December, maybe November of this year. Buy in then when the miners are going down, and then hold on to them until you get past the halving event, and then sell 280, closer to 300 days into after the halving event, possibly then. I just don't know if that's going to happen. All right. We know that the miners right now are basically mining Bitcoin, a single Bitcoin around between 8 and 13,000, somewhere around there. When the halving event comes, Bitcoin's going to have to be at least 26,000 for those guys that are mining at 13,000 per Bitcoin cost to break even. So we know Bitcoin's going to have to go up at least to 26,000, if not more, depending on the network hash rate. The network hash rate is also going to increase over time. I'm guessing that price point is going to be closer probably to 30,000 at that time. We got basically a year and 2 months left, something like that. So Bitcoin does have to go up in price prior to that. If that happens, I'm not sure that the miners won't follow suit with Bitcoin and they will actually go up in price. So like I said, this is the data that we only have for one instance. We don't know if it's going to repeat. We also had the pandemic and mixed in there also, which threw it a curveball a little bit. Before the pandemic, right? No, before the halving event, we had the pandemic also happen. So that kind of threw a curveball in there as well. We don't know if things would have worked out a little bit differently. And we just don't have enough data. Let me know what you guys think of this. This is a lot of stuff to take a look into. But I would have preferred to have more halving events to compare against than just a single one. So with this next halving event, we will have more data for the following halving event that's going to happen after that. And what's it going to be? We're having event in 2024, so 2028 is the next halving event possibly. We'll have at least 2 halving events worth of data that we can look into and see how things performed and make some possible assumptions at that time. But right now, I just don't know. We'll kind of keep an eye on this, see how the data plays along with what's happening this year. We'll kind of reference this a little bit, maybe see where things are going. That's about it. Okay. So that's it. I'm rambling on here. But yeah, let me know what you guys think, whether you guys think this is going to repeat or not. And you guys think we're going to go back down to 19,900 with Bitcoin? And what do you guys think of DMG numbers and Iris Energy numbers as well? Okay. Other than that, I hope you guys have a great weekend. Thank you so much for watching. Spreadsheets available to my Patreon members. As always, thank you to everyone there for their continued support. The community there is growing nicely, so that's fantastic. They're helping me out quite a bit. So I'll leave it at that. And that's it. I hope you guys have a great weekend. I'll see you next one. Bye.